Hey folks, welcome to Weekend Technical Analysis Update by InTheMoneyStocks.com, your leaders in pure technical analysis, avoiding all that Wall Street hype. This Weekend Technical Analysis Update is for Monday, July 20th through Friday, July 24th, 2009. Well folks, last week was a pretty wild week, although Friday was almost a non-existent day. Volume the lightest of the year in total, which is kind of surprising considering we've had the day before the July 4th holiday coming in, the Monday after that weekend, and this was even lighter than that. So it really shows you how a lot of the angst in the market, a lot of the powerhouse moves happened earlier in the week, and then by Friday it seemed like people just said, you know what, I've had enough, I'm going to the Hamptons, I'm going to the Jersey Shore, I'm going on vacation with my family for the long weekend and just taking off early, and that's exactly what we saw. We saw a very, very flat market on Friday. The Dow was up 32 points, the NASDAQ was up about 1.5 points, and the S&P 500 was down 0.36 points. So a very muted Friday afternoon and all day, really, in essence. But the bottom line is, last week was a monster up week. I'm going to cover all that, folks. I want to rehash last week. I want to go into what's going on next week. What are the technical levels? What is the key economic news coming out? What about earnings? Because we're right in the midst now of earnings. Last week was a big week. Next week promises to be an even bigger week for earnings. So what are we going to get into this week? First of all, let's start with last week and how things played out. Well, first of all, many of you that have been following us know, especially our premium subscribers, that going back to a week ago Friday, we had called a pivot day. All right, and here's last Friday, folks, the 10th of July, and we had called out for the previous few days that Friday would be a pivot to the upside, and it was absolutely nailed 100% by our chief market strategist and myself here, and my partner Nick Santiago at InTheMoneyStocks.com. As you see the market pivoting here was the pivot, folks, right there. That's the pivot we called for, and it happened to a T, and there were a lot of reasons why. Most of them cycle work we did, hardcore analysis, technical work, charting, geometry, a lot of that stuff played into it. But bottom line is, if you looked at the previous week when we had been getting hammered in the previous couple weeks, it was an essence of too much bearish sentiment out there going into options expiration week. For those of you that follow us, you know that we're very, very much the contrarian when it gets to a certain point, and there was just too much bearishness out there. So if you want a simple reason, just go with that one, although there's a lot more cycle work that goes into it as well. Here's the pivot a week ago from Friday. The pivot up, we trade up into the close, and then that's all she wrote. Monday, we start to rally. Big move on Monday. Tuesday, Wednesday really start, and I have to bring the market into focus here. All right, Tuesday, Wednesday, all right, massive moves to the upside. In all reality, the market's just traded higher all week long. I think we had 5 straight up days on the Dow and the NASDAQ, while the S&P was down just fractionally on Friday for 4 out of 5 days. All right, so that's what we had. Great call on the pivot. For those of us that were premium subscribers, you were able to capitalize on that. Now, again, folks, the question is, are we going to break out from the highs that we made about a month ago or so, or are we going to come back down? That's really the big question, right? I mean, you have a lot of bullishness all around, and the bottom line is, which way are we going now? Are we going to follow the bulls to the upside, or are the bears going to recapture this market? And again, we've projected some stuff out in the cycles that I think is important for you all to take a look at. So we do encourage you that you join the Research Center if you haven't already. We've talked to our premium subscribers about some things that we're seeing in the charts that are showing up in the cycle work, in the charting, in the price pattern and time analysis. And again, hopefully we'll nail that, and I think we will nail it dead on here in the coming week or two. And again, there's a matter of, are we going to break out through the highs? Because if you look at the daily chart here, folks, you can see there's a possibility. Here's the previous high on the daily chart, and we very well could break out as we've made a strong bullish move up. But at the same time, this is going to be, you're going to have some resistance points here, and maybe the bulls recapture, maybe we break down and really make a fall back down. So there's a lot of little kind of quirks going on in this market that if you read it properly, you can get a clear head, but there's not a lot of people out there that can. Now I'm going to go back to the intraday 10-minute chart right here, and I want to talk about some levels, all right? So let's take a quick look at what's going on here and really focus in on the charting and the technicals. Number one, right before we do that, I just want to go over the economic news next week. Next week, economically, it's a quiet week, but the earnings, these are just tons and tons of earnings. All right, first of all, economic news, leading indicators on Monday at 10 a.m., Wednesday, crude inventories. Thursday, initial claims and existing home sales. And then Friday, we have Michigan sentiment. That's it for the whole week. So it's a very quiet week economic news-wise. But that's not nearly to say enough, folks. There's a lot of other things coming out, and that all has to do with earnings. And Monday, we kickstart things after the market closes with Texas Instruments. Tuesday, all right, Tuesday's big Apple computer coming out. Yahoo on Tuesday. Big day. Wednesday, eBay, Morgan Stanley, Wells Fargo, Amazon, Thursday, Amazon, American Express, AT&T, Capital One. All right, just constant flow here. Also, McDonald's, Microsoft. Just, it's almost unbelievable. And even BIDU is all on Thursday. So really, that middle of next week, even starting Monday with Texas Instruments, it's going to be a powerhouse move. So you don't even need economic news to cause any volatility. The earnings will take care of themselves. I promise you that. All right, that's going to be enough volatility for us to handle. Trust me, as traders, as investors, as long-term swing traders and investors and so forth. So again, that's what's going on next week. Now let's look and focus on the charts and really look at what's going on. And what you can see here is the big move up there. We had a nice solid move up on Thursday into the close. Friday was just a pause day, folks. A very, very flat day. You can see we kind of rotated up and in, all inside this big move. Notice this big move here, all inside. Now I isolated for our premium subscribers a major top in this market on the intraday chart, which you need to continue to follow, and that is this yellow line. This yellow line, I'll show it to you on the 60-minute chart, but I found this for our premium subscribers, and it came out to be an exactly true, beautiful top in this market. Really amazing how the move up here went right into this yellow line, and I'm going to show it to you on the 60-minute now to get a good sense. All right, check this out. See this tip on the 60-minute right up into that? It touches that and then pulls back, and we never saw that yellow line again and never have made it back. Now, if we move back up, that's going to be resistance, but notice how it's slanting up. So this is a major line, major discovery in the markets due to chart analysis. And what you can see is this line comes all the way back to mid to late June at the low here on the 23rd. And if you connect the low to the 23rd to the low to the 25th, and then take it all the way to the gap low of this gap down, see the gap right here, take it to the low window right here, and that's on the 2nd of July, and you connect all these lines together and you just drag that line right through, the market comes all the way up to this high level right here. We touched that and pulled back, and that was really the best line of the week, in my opinion, the star line of the week that we have discovered, and it held up beautifully as the market touched it and pulled back. So great line there. Now, again, the big question is, are we going to start to shoot up early in the week and touch this yellow line again, which, by the way, will be higher at that point come Monday? The question is, do we go up and touch it, or do we reverse back down and fall back down? And again, the charts are telling us some key moves coming next week. You got to be on top of this, folks. It doesn't matter what earnings news is. It's ultimately written in the charts. It's kind of like looking at cards, and your destiny is already written out. The charts will tell you that regardless of the earnings, and the best thing to express on that is for Goldman Sachs. Goldman Sachs ran big on Monday, and then on the fantastic earnings, it was paused. It was a pause day where it really just traded flat, and that was already in the cards based off the move into resistance, and so far a big move up on Monday off the Meredith Whitney call on the financials. All right, so again, key things to watch. Let's go back to the 10-minute and just focus on these lines, and that's what we'll finish up with here. On the upside, this blue trend line was a very major one. We called it out to our chat room. Once it broke, you got a nice move down, and then before a little bit of light volume pop into the close. Remember, Friday there's no volume in this market, the lightest day of the year by about 25 million shares on the SPY. That's how light it was. 25 million less than our lightest previous day, which is quite amazing to me. But nonetheless, that's the way it is. That's the doldrums of summer, folks, when there's not a lot and people take off early on Friday, just the way it is. Nonetheless, this blue line will work as resistance if you come up and hit it on Monday. After that, you'll have this little dotted line right here, and then ultimately a move up to the highs from Thursday at right around 94.50. 94.50 will be resistance. If you break through 94.50, watch this yellow line. That will be the next point, and eventually you'll go up and hit that if you continue to move up sharply next week. On the downside, if you start coming down, this pivot low will be minor support at 93.75, then a little more at 93.65, and ultimately 93.50 will be a little bit of double bottom from Friday's lows right down here. If you continue down, you're going to start to look for this low down here at 93 even number, and then a move all the way down here to around 92.75 to 92.50. That'll be a good little level right in here on the way down. Then if you continue down, you're looking ultimately at 92.25. And then obviously we have to go to the 60-minute to see through it. Now every dotted line on this chart is a minor level on the 60-minute, while every thick line is a major level. So really the first major level on the downside on the 60-minute would be 91.75. On the upside, it's going to be this slanted line. This slanted line or the double top going back to a month ago or so, whichever one comes first, obviously. But ultimately right now, if we popped early in the week, it would be this yellow line that you'd really watch for resistance. After that, on the downside, though, after the white line here and the 200 moving average together, you're then looking at this gap fill at about $90.65 or so on the downside. So that's what you're shaping up to be, folks. The technicals, again, the charting is showing us some key things going on here based on price pattern and time. So I do encourage you to join the chat room if you are more of an intraday player, or at least if you can spend time in the chat room. And that's the key, guys. The chat room is a great learning environment, but you need to be able to devote at least a couple hours a day to being in there to make it worth your while, in my opinion, at least. And that's speaking from the heart. Obviously, I'm just not. I want you to be able to spend time. Otherwise, it's not working. But regardless, regardless. You don't have to be a day trader for that. It's an amazing learning environment where you'll probably pick up more in a month of being in there than anywhere else in 6 months. But long story short, that's great. The research center is fantastic, folks. There are so many services included in that. Hot charts and alerts, pro trader watch list, hidden gems. By the way, new hidden gems will be out in about a week and a half. A new small cap I'll be highlighting. Daily market report, daily technical analysis videos. I do those myself personally, 30 plus minutes, 30 to 40 minutes a day of hardcore technicals and chart analysis and psychology analysis of the markets and projections. It's just definitely key, guys. $49.99 a month. You can't beat it. All right, folks, that's enough for today, enough for the weekend. Go enjoy your weekend. It's beautiful here in New York. I look forward to a profitable week next week, as I hope you guys do too, and we hope to see you with us soon. Take care.